Hey everyone, and thanks for jumping back into the cryptoverse. This is your weekend update premium video. Hopefully you enjoy the content. We touched somewhat on the inflation CPI in the video that we did on Tuesday. I want to talk about it a little bit more and just make sure that everyone knows that it's on the website in case you missed the video update on Tuesday or with the AMA that we had on Thursday. Right. So if you go to the website and you just type in inflation, you'll now see a chart called inflation and CPI. And interestingly enough, one of the things, and we've talked about this before, again, Bitcoin has never experienced this level of inflation. And so there are some signs that are worth looking at with regards to, where will inflation ultimately top. One of the most common questions I get is where exactly is the bottom in terms of the price? And people have asked me, where do you back the truck up, right? To go all in on Bitcoin. But, in reality, it's not just a specific price. Ultimately, at the end of the day, most people are not going to buy the exact bottom of the market. One of the ways that you can get close is by just having a DCA strategy that you just sort of carry out on a weekly or monthly basis. However, from the point of view of inflation, remember, it's always good to have a healthy bag of cash to come into the market after inflation has peaked, right? And if you're constantly worried about, are you going to miss the bottom? Remember, the people that bought Bitcoin in 2018, if you bought it at 3,100 or you bought it at $4,000, I understand there's a difference there. I mean, I understand that your ROI will be different at the end of the day, but the people that bought Bitcoin at 4K instead of 3K or 3,100 back in late 2018, it's not like they were that upset about it when, come 2021 we went to $69,000. Okay, so that's why I'm saying, and I think it still holds true today, is yes, there are indicators that have bottomed, right? There's also plenty of indicators that have not bottomed, even though the macro still looks really bad. Okay, we're going to talk a little bit more about that in this video. But right now, you can see that inflation is in fact on the rise. And when we saw a period of high inflation in the past, notably the 70s, right, as you got into the 70s over here, you can see that the S&P 500 went sideways for a while, right? I mean, that's what it did. It just simply went sideways for a while. And yeah, it technically put in a new all-time high. But I mean, if you account for inflation, no. But yes, I mean, it ultimately just went sideways for many years, in fact. So, will the 2020s be a carbon copy of the 70s, or will they be a carbon copy of, say, like the 40s? You can also see that the S&P was somewhat stagnant over here. And really, I mean, even though it was, you can see at the first peak of inflation, that's where the S&P bottomed, right? And then it was just a slow uptrend after that. In the 70s, it was that first peak, that first major peak. That's where the S&P bottomed. And yes, it went sideways a bit more, but it was still a general uptrend for a while. So that's why I don't mean to just say the same thing. I don't necessarily mean to be repetitive, but there is a lot of evidence to say, some patience is needed when it comes to when exactly is inflation going to peak. For instance, let's imagine a scenario where some indicators have bottomed, or some indicators have, or maybe more than there are currently, but maybe there's still a couple out there that suggest we could go lower. I think during a highly inflationary period, it would still make sense to keep a stack of cash ready until after inflation has peaked, right? And the reason I keep saying that is because at the end of the day, it's we can learn lessons from investors that came before us, right? I mean, like, some people learn these lessons the hard way, and at the end of the day, it was the people that just sort of waited for inflation to start to come back down here. Yes, maybe you would have missed the bottom if you weren't already DCAing into the market, right? Which, again, I do think a DCA strategy is the correct approach. But if you're trying to figure out like what exactly to do, I think it's twofold, right? Especially when it relates to Bitcoin and the cryptocurrency asset class, right? It's cash is king, stack cash, DCA some Bitcoin, right? But I still think, despite all that, I still think that stacking cash remains priority. Okay. Bear market rallies or not, right? We had it from January, February, and March. I certainly don't expect, Bitcoin to just go straight down, even though it's basically what it's done for the last several months. But remember, you can have bear market rallies. It doesn't necessarily mean that stacking cash wasn't the right solution. Again, think about it: January, February, March, stacking cash that entire time, and we saw the assets go up, but ultimately the bottom fell out and they continue to go lower. So you have to keep that in mind. Take a step back from the market, right? We see the macro. Macro doesn't look so great right now. And I've said before, realistically speaking, especially for on altcoins, you're likely not looking until 2023 that it's going to make a lot of sense. Maybe a little bit earlier against the U.S. dollar, but maybe not. I mean, and perhaps, and I think against Bitcoin, it's gonna take even more time than say than like just the end of the year or something. So I look at these charts and I look at inflation, and when I compare this thing with Bitcoin, if I just overlay Bitcoin and I zoom in over here, I say, yeah, Bitcoin is experiencing really high levels of inflation for the first time, and so far the response has not been a good response, right? I mean, you can see inflation goes higher, Bitcoin's going lower, right? In general, right now. Now, one of the things is it sort of begs the question, well, what about this narrative of Bitcoin being a hedge against inflation? In general, first of all, there's two things to that. Every crypto bull market has a narrative, right? I mean, sometimes it's store of value, sometimes it's peer-to-peer, the future peer-to-peer cryptocurrency, sometimes it's a hedge against inflation, whatever it may be. There's always a narrative, okay? And some narratives sort of die, some narratives don't, and they become weaker over time, maybe they become stronger over time. But when inflation is low, okay, it's a great hedge. Bitcoin's a great hedge against inflation. The problem, as I've said before, is once inflation starts to really go up, right, to levels not seen in decades, right? Really not seen in decades. The inflation hasn't been this high since the early 80s. When something like that happens, the reason it's really no longer a hedge is because, again, the Fed becomes so hawkish, and they're raising interest rates into a slowing economy, and risky assets like cryptocurrencies are going to be some of the first to go off, right? In 2019, I pleaded with people on my YouTube channel that the risk-adjusted returns on crypto were better than any other asset class at the time. That was what I thought, right? It's what I thought back then. And I do think we'll get to a phase where that'll be true again. And I'm talking about the altcoin market, where the risk-adjusted returns on them will be actually quite rather attractive. The problem is right now it's just not. Again, notwithstanding bear market rallies, I just don't think the risk reward on alts right now is that attractive as we continue to face these macro headwinds, and also still we're still looking at a relatively weak Bitcoin. So these are just things to consider. We also have consumer price index on here, CPI. So if you want to see what that looks like, you can. And you can switch this. So you can switch price to a linear and a log scale. And also, by the way, you can look at this for a lot of different cryptocurrencies as well. So if you want to look at inflation in Japan, that's what it looks like, right? And maybe we go back to stocks and compare it to say like the S&P or something. This is what it looks like in Japan. And here in Japan, again, when inflation is high, I mean, gosh, look at what it was in Japan in the 70s. See, these are things that 24%, 24% sort of makes Japan inflation today look like nothing, and it is still relatively low today, 2.4%. But if you want, you can now use this tool, and hopefully it'll help you navigate the cryptoverse just a little bit better. And of course, we are starting to integrate other things into the website. A lot of you guys have requested more integration of precious metals, more integration of stocks, and so we are in fact starting to do that. The other thing I wanted to briefly mention, we were looking at this earlier, is actually the transfer volume of Bitcoin. And if we switch this over to a moving average, you can see that the transfer volume of Bitcoin denominated in Bitcoin, not denominated in US dollars, because of course that's going to be highly correlated to the price in US dollars. But if you just look at it denominated in Bitcoin, you can see that we saw a fairly large spike over here, during this downtrend. And I suppose the other things you could do is just look when we had major spikes in the past. And the last major spike we had was over here. So in August of 2017, a few months before it finally reversed course, right? And then before that, it was earlier on, which you could argue was sort of an accumulation phase, and that's all this volume coming in sort of kickstarted the next, arguably kickstarted this next bull market. So again, my thinking on all of this right now hasn't really changed. I mean, Bitcoin's risk right now is relatively low, and if you isolate, just say the 0 to zero point 0.2 risk band, and just say, okay, well, what happens if you just DCA Bitcoin between 0 to zero point 0.2 risk, and sort of just ignored it every other time, then it would have worked out relatively well, right? I mean, as long as you had a multi-year outlook, it would have worked out relatively well. Even if you saw continued downside in the short term, which you would have seen basically every other time for the most part, except for maybe March of 2020, you would have seen further downside eventually once we started to see those blue dots. Okay, so I don't want to sound like this is the bottom, because ultimately there's a good chance Bitcoin could go below 17.5. I think it, honestly, I think eventually it probably will. But even with all that said, buying Bitcoin below the zero point 0.2 risk level, I do think will eventually work out, right? I mean, that's a fairly safe thing for me to say, but eventually, eventually it probably will work out relatively well. And even if you want to be a more conservative investor and just only buy up to the zero point 0.2 risk band, even now, I mean, now's the time, right? I mean, it's below the zero point 0.2 risk level. And the total cryptocurrency market cap risk is at 0.174 and also coming into that dark blue region, all right? But remember, these regions can take a long time to play out. What I think is my speculation right now is that we're still looking at choppy markets. There still is that bearish bias on the macro. There's still going to be a bearish bias. The only, I mean, look, we've talked about the idea of relief rallies. We haven't really had any. And the one thing I'm sort of looking at as one potential area, just because we saw the Nasdaq bounce off of this area, not only in the financial crisis but also in the .com bust, was that bounce off the 200 week, right? It was that bounce off the 200 week moving average, and in over here you can see that it got a fairly 27% bounce or so, and then in the financial crisis we saw about a 20% bounce. So, I mean, if the Nasdaq bounces 20, we're not even at it, by the way, yet. I mean, we need to go below 11. We need to go closer to like 10.8, 10.7, something like that. 10.8. So if we make it closer to say 10.8 and we do get that relief rally, then and it is a 20% one, you're going to see some relief in stocks as well, or in crypto as well, more than likely. But I do want people to remember that even if that happens, which is what we saw in Q3 of 2018, still does not negate what might happen, over the following quarter or two. Okay, so I still sense a lot of angst in the market, and I think there's a lot of people constantly wondering, has Bitcoin bottomed? Has the S&P bottomed? Where exactly is the bottom? I think what's more useful than asking when to back, or what price to back the truck up at and load up, it's more so when. Okay, I don't think I mean, if you're stacking cash, the exact price shouldn't really matter over the long term, as long as you're figuring out like the right time to kind of slowly come in. I don't think you'll ultimately regret it. I mean, think about 2018. Like, if you had picked up some over here, and then you decided to also pick up some over here and some over here, it's not a huge deal if maybe you miss that one, right? As long as you occasionally pick some up in preparation for the next bull. But even in this case, we still had a long sideways move. Just like, likely, or like just like we had in 2015, we had a sideways move after the bear market ended. So I look at it today and say, yeah, like we're probably going to get a relief rally at some point. And whenever it happens, there's going to be a lot of people that are going to say that whatever that level was in fact the bottom. And they could be right. But remember, even if we do see some type of a bounce, whether it's here, whether we have to go down further and then we bounce, right? We're still likely looking at some sideways action for a while, where the market gets relatively boring. It's already starting to get boring, but also things like the social risk will really start to come down more. And again, you can see the social risk is now at 0.378. We're continuing to put in lower lows and lower highs, just like we did in 2018. And once we see this really bottom is when I think it'll make more sense to get into altcoins, once that social risk is completely wiped out. basically once everyone's left, it's going to leave. I think one reason that's useful is because it potentially shows there's not really that many more sellers at that point. No one's really interested in crypto anymore, and so I mean, of course, there's a seller for every buyer, but in terms of the the imbalance between supply and demand, once you see that social risk go all the way back down to lower risk bands, I think that'll be a lot more attractive in terms of accumulating altcoins. So I hope that makes sense. Now we're currently coming in at around 50% undervalued. I'm guessing that the time to buy, to branch out into altcoins will be whenever the undervaluation gets closer to about 70% undervalued, 65, 70%, somewhere around there, plus or minus a couple percent. That's where I think is the more attractive time to come in for altcoins. So we've made it a long way. So I mean, if you've been avoiding altcoins for the last 6 months, I mean, they've certainly bled quite a bit, and they do so quickly, and then people sort of forget about it, and then they want to FOMO back in. But um, I mean, look at Ethereum, right? I mean, look at this chart, right? It's just been straight down, and I mean, I look at this and I compare it to say 2018, and I mean, it looks like we're in that region, right? It looks like we're somewhere in this drop. Um, and ultimately, we still probably have a ways to go with ETH in terms of looking at a more convincing market cycle bottom. And if you go look at the ROI of Ethereum after the bottom, it's really telling. Or sorry, this is the top. This is after cycle bottom. Let's look at after cycle peak for Ethereum. It's really telling. And I've even had some people in the chat room that have been upset with me because of how bearish I've been on Ethereum in 2022, especially the Ether Bitcoin valuation. But I, I can't get away from what the data suggests, and I look at these types of charts and I say, well, while we could be at a bottom, it's always possible. I look at a chart like this and I say, you know what? You're likely looking at late this year or sometime next year, early next year is going to be a more attractive time to get into ETH. I think late this year at the earliest, and then probably some accumulate, some decent accumulation next year, especially in preparation for the next Bitcoin halving. So right now we're in the pains of the bear market, right? Especially with altcoins, we're still in the pains of the bear market, and I do think Bitcoin is likely closer to a bottom than a lot of other cryptocurrencies. But we're in the pains of the bear market. Once we get through it, then we'll enter the accumulation phase, which is where the real money is made. Okay. And that's been a common misconception. People say, well, don't bear markets make you rich? Yeah, they help make you rich by leading to accumulation phases where you can actually buy assets that you like at reasonable prices. Okay. And that's the problem with bull markets is they have a way of changing your concept of what is reasonably priced. And one of the things I said in 2021 is that if you join crypto in 2021, you simply do not know what a cheap altcoin is because you never have seen it cheap. You've seen a buy the dip cheap, but you have never seen like crypto winter cheap. So, I mean, they're getting cheaper, right? A lot of altcoins have been going down a lot. I think in 3 to 6 months they're probably going to be even lower than where they are today, and it's going to be a more attractive time to come into the altcoin market again. My biggest mistake with altcoins has just been coming in too soon. And while it always eventually worked out for me, I'm just sort of trying to help people not experience the short-term pain of that. So if you're someone who's been buying altcoins because you think I'm too risk averse, while I'm sure you felt some pain over the last few months because most of them have still gone down, eventually you'll likely be right. Okay, and they'll hopefully you picked some good ones and they'll go back up, but eventually you'll probably be right. But for now, I'm still not touching altcoins with a 10-foot pole, and I think just Bitcoin and cash is it makes the most sense. And if you want mine, I mean maybe just 50-50, you could split it up. But I still think cash is still slightly higher priority than everything else. So anyways, let's talk about a couple other charts. Some people have asked me to check in on the bottom indicator charts more frequently, so I wanted to do that. One of these charts I think is somewhat interesting, and that's the supply in profit and loss. Normally, market cycle bottoms occur after they cross. You can see it has not crossed yet. They are getting relatively close to crossing, and so this one still teases us. Okay, if you look at some other bottom indicators like the hash ribbons with price momentum added, you can see that it still has not flashed yet. Normally, once it flashes, it signifies the end of the bear market, and it's not flashed yet. Okay. Note that it will likely miss the bottom by a few, it might miss it a little bit, like it did here in 2014, 2015, like it did slightly in 2018, but I mean, it still gets relatively close. So again, let's look at one more bottoming indicator, and then we'll probably go ahead and wrap it up relatively quickly. And that was the terminal price. And one of the things you'll notice is every major bottom has occurred when the balance price was slightly higher than the actual price. So you can see the price came below the balance price here, again over here as well, and then here's again. So we're looking at that right now, and the balance price right now is coming in at 17.1K. And it's actually moving down right now. So these are all just things to consider, okay? I still have my limit orders set on Bitcoin, nothing else in crypto. And I've been filled at 0.125 risk already. I've been filled at 0.1 risk already. The next one I have is at 0.075 risk, okay? That are on 16.7K. Then you have 16.1K, 15.7, and then 15.5. These are where my limit orders are set. And, hopefully they get filled one day. Might not be today, might not be next month, but hopefully they get filled one day. And then we'll hopefully build out from there. But anyways, I hope you guys are getting through this phase. This is the worst part, of these crypto market cycles is the bear market. And, even if you take the peak as measured from November, which is a reasonable, that's where the all-time high was. We're about 7 months in now, 7 to 8 months. We're getting pretty far in. Normally, you would look towards at least a year. And remember that 1-year ROI is something we've been following for a long time. If you see it come down here around 20% or so, it's a great indication that you could be looking at some type of trend reversal. But anyways, the social media stuff is always very telling, because I look at this stuff and I say, and I told you guys back over here in late 2021 and even in mid 2021, we said, look, it's no new money, it's just the same investors moving money around, and you can see that really it's played out. A lot of people have left the cryptoverse. You look at YouTube views, it's in a downtrend. It's leveled off a little bit recently, but it's still in a macro downtrend. Reddit comments, Reddit posts, these are all in, basically they're just in downtrends, right? The Reddit stuff takes a little while to load. But whenever it does load, you'll see yet again that these things are still in downtrends. And so this phase, while it's difficult, it's important, because if you can stack your cash, right? If you save that money and come in when the market is really, really quiet, right? And no one cares about crypto. That's usually where all the money is made, right? So still think Bitcoin heavy, cash heavy. Enjoy your summer. I do hope you guys are enjoying your summer. We're already in July now, so hopefully you guys are enjoying your summer. We'll get through this 1 week at a time. But I think we'll go ahead and wrap it up there, and we're going to continue adding stuff to the website. The next couple of things that you're going to see added here probably in the next week or two, one thing is the modern portfolio theory page. That'll be added hopefully in the coming weeks. Hopefully this week, if not this week, maybe next week. And then also the Ethereum risk metric. It's already, the Ethereum risk metric already accounts for diminishing returns on here, but I actually want to get you the chart so you can watch the chart on the website as well. So that is coming too. So, all right, guys, we'll wrap it up there. Leave a comment down below if you have any questions. We'll see you next time. Bye.